do believe the market's getting much closer now to the answer that we're all looking for. Everybody out there is looking for the answer of, have we truly started a new bull market, or are we still in this bear market, right? And everybody's looking for that answer, but we're not going to really get that answer until it really becomes evident and clear where the economy's headed. We've gotten way too many mixed signals where you get good information, then bad information, good information, bad information, right? And so everybody's kind of playing this waiting game of like, where are we really headed here? I think we're getting very close now at this point in time, but we're not quite there. We're just getting close. That's all I'll say about that. In order for the Fed to maybe drop rates a bit, I think we'd have to see inflation, as in terms of CPI numbers, come into the threes over the summer. We'd have to see a little more economic weakness. You don't have to see unemployment spike to some insane numbers. We just need to see maybe unemployment come up a little bit to maybe high threes, maybe a low four. See more worries about recessionary fears over the summer. And that would be a situation in which the Fed could then start cutting rates. It doesn't mean they're cutting from 5% type Fed funds rate down to 0. They could easily cut down to 4. They could cut down to 3. They could cut down something to where CPI is at. Let's say CPI was at a 3. Let's say it was at like 3.25 at that time. They could easily cut Fed funds rate at that time down to 3.25 if they wanted, or they could take a stair-step approach down. It's really up to them on kind of what approach. And I think a lot of it would come down to what type of economic weakness. But you don't need to see economic carnage for the Fed to start dropping rates. And we know the Fed is, they're much more inclined to drop rates than raise rates. This is just such a hated bull market. It's not even funny. And the reason it's hated by so much is because a lot of retail got trapped into thinking the market is just going to go lower and lower. And in the back half of 2022, a lot of retail was loading up on put options, short selling, because they believed all these stocks were going to 0 or something like that, rather than buying the dip, right? And then a lot of other people went to cash. We obviously saw, to get the NASDAQ to go down 37% peak to trough, you know how much money you need to see leave the market, essentially. The type of selling pressure that got put on in 2022 was intense, especially for the first 10 months of 2022. It was insane. So to get that you need insane amounts of selling, right? So a lot of people went to cash, assuming the market was going to go even lower. And so this has just been, since I've been in the market, this is the most hated bull market I've ever seen. This is more hated than coming out of Rona. This is more hated than coming out of the great financial crisis when I was just getting in the market in 08, 09. I've never seen a market this hated, to be honest, because so many people are cash and so many people are puts and shorts getting wrecked, and they're just like, they hate it, man. They absolutely hate it. And little do they know, the biggest of the big companies, many of them are going to report expansion of margins in a substantial way, expansion of operating income in a substantial way, and also expansion of net income and EPS in an epic way in the second quarter, third quarter, and fourth quarter. So wait till you see that come in, okay? So, that's the part of this market where I think is really interesting. It's just such a hated market, and the higher this baby goes, and the more earnings come in, not disappointing, and come in better than expected, the more it's going to be just a more and more hated market. Because the bottom line is, and I show this on Yardini numbers sometimes, right? Forward Ps, small caps, extremely cheap. Mid caps, extremely cheap over the last 25 years. Large caps, a little expensive, okay? And so, but large caps are viewed as the best companies in the world, right? These are the superstars. These are the Michael Jordans and LeBron Jameses and the Tom Bradys of obviously the stock market, right? So people believe you should pay a premium for those. And those companies have proven they can be much more profitable than anything we've seen throughout past history, which means, paying up makes sense. And never mind that, you throw on top, if they do cut rates, obviously what you're going to be willing to pay for stocks is immensely more. And if treasuries start going down, what you can get on that, savings accounts, CD accounts over the next 1 to 2 years, then that money has to rotate somewhere. Where's it going to rotate? Going to rotate into the stock market, right? These are all factors you got to play out. The stock market is a big game of chess, and you got to be playing a few moves ahead. Let's just put it that way, okay? Palantir, PLTR. So Palantir is at the cross sections of data and artificial intelligence. Now, when I say artificial intelligence, I know all of a sudden everybody's starting to talk about artificial intelligence the last few months, especially since ChatGPT came around and got really popular. Now everybody wants to talk about AI. Palantir's been working on artificial intelligence way before it became a cool buzzword over the last 3 to 6 months. I can tell you that much, okay? And I've been describing this company as the cross sections of data and artificial intelligence for a long period of time now at this point in time, okay? The bottom line is, for this company, if you are a government, or if you're a military, if you're a commercial customer, they're going to help you make better decisions for your government, make better decisions for your business, Okay, make better, if it could be on the battlefield, make better decisions when it comes to that. Okay, now when it comes to Palantir, it's a very interesting time to be a buyer of this stock. One is the stock price is extremely low right now. Right now it's in the 7s. The second component is this is a company that's just getting to GAAP profitability, just getting there. Now, usually when a company gets to GAAP profitability and they can kind of prove that out, you see an massive upward move in the stock price. And so I wouldn't be surprised if Palantir does have a massive upward move in the stock price over the next 1 to 2 years here, being that they're just getting to that beautiful stage of going from GAAP non-profitability to profitability here, okay? They also beat on revenue on the last quarter as well. But the interesting thing is expectations are very low for this stock, even for this upcoming quarter. The analysts have them actually losing money on a GAAP basis, and they have revenue actually that's down on a sequential basis. They did 508 this past quarter. Analysts have them doing 505. So I really like the setup here of kind of low expectations in regards to Palantir. Now, if we look at the numbers a little deeper here, right? I think I'm getting the stock for a very undervalued price. Remember, they're just getting to profitability. So 16 analysts cover the stock. They have them doing EPS of about 20 cents this year, right? Which would put it at a 2023 PE of, let's say, about 38. In 2024, they have them doing 25 cents, which I wouldn't be surprised if they, usually when you see a company just get to profitability, usually the second and third year, you see massive increases in terms of that EPS. So I wouldn't be surprised if they come in with a number a lot better than this. They have them at about a 31 PE based upon 2024 numbers. So for a company that's just at the infant stage of profitability, I love this, because usually when you get to a company that's at the infant stage of profitability, you're talking about many times you have to pay, 100, 200, 300, sometimes 1,000 PE for that type of stock. To get it at this sorts of valuations makes it extremely attractive for me. For a double-digit revenue grower over the coming years, oh my gosh, okay? In my opinion, that's a steal deal. Now, also, I get to sleep very well at night. I get to sleep very well at night with this stock. They got $2.5 billion of cash roughly on the balance sheet, and they have total liabilities. So if you add up all their liabilities together, we're sitting at, let's say, $818 million of total liabilities as of the end of 2022. So this is a stock I can sleep very well at night. I don't have to worry about them. Are they going to go under? I don't have to worry about any of that. Alex Karp leading this company, before we get to kind of my buy prices and everything like that, let me speak on Alex Karp for just a moment here. So in regards to Alex Karp, I think he's the right man to be leading the company. I don't think he's always the right man to be talking about the stock in the business. I think there's other people that could probably do that on a better level than him. But I do think he's done a phenomenal job, and he's attracted one of the most impressive workforces in the world, right? And so I believe this company is going to become exponentially larger than it is today. I think they're going to become one of the most profitable companies when it comes to their net income margin you're going to find out there. And so I'm very excited for the future of Palantir here. Okay, now in terms of buy prices and all that good stuff, here's what I'm looking at. Under $8 is a load the boat situation for me in regards to Palantir. It means I'm, pretty much going to be buying it almost every single week, which is something I've been doing pretty close to almost every single week recently. $8 to $10 is a buy for me. In regards to Palantir stock, $10 to $12 is where I start to do, smaller buys, let's call it light buys, whatever you want to say in regards to that. Over $12 at that point in time, it would just be a hold for me. Doesn't mean if Palantir wouldn't still be a buy over 12, because it might still be. It's just I'll have bought so many shares at that point that I'll be good and be ready to just kind of hold this stock from that point on, okay?